90% of people who want to start trading in 2026 will fail. Not because trading is a scam or market is manipulated by AI, because they are lacking one of these critical trading skills. Fundamental analysis, which is the evaluation of economic news and data to understand market direction. Technical analysis, that is about how to analyze price charts, candlestick patterns, and market structure. Risk and money management, that includes position sizing, limiting losses, and protecting capital to ensure long-term survival in the market. And trading psychology, that is the ability to control emotions such as fear and greed while maintaining discipline and consistency. If you're missing even one of these trading pillars, long-term profitability becomes impossible. This is Ali from Linuxbit with years of trading experience in forex and crypto market. Stay with me up to the very end of this video because I'm going to walk you through all you need to know before you place your first order in 2026. If you think markets move randomly, they don't. Every major move in the price is driven by economic forces. Fundamental analysis helps us understand how economic data, central bank decisions, inflation, employment reports, and global events influence market prices. As a trader in 2026, you need to know when major economic news are being released, what assets or currencies are involved, and how strong the news is expected to impact the price. One of the most widely used tools for tracking economic events is forexfactory.com. Its economic calendar shows you upcoming news releases, previous data and forecasted numbers, and the impact level of the news. High impact news are colored in red, and they can cause extreme volatility in the market. Technical analysis focuses on reading price action on charts to identify trends, signals, and candlestick patterns that suggest where the price might go next. Technical analysis studies the behavior of the price itself because the price reflects the ongoing battle between buyers and sellers. To master technical analysis through price action trading, you need to recognize repetitive market cycles by identifying spikes, channels, and trading ranges, analyzing candlestick formations to read market sentiment, identifying trends to trade in their direction, marking key support and resistance levels where the price might react or reverse, spotting classic chart patterns that indicate potential continuation or reversals, and paying attention to important signal bars and key bars that often reveal shift in control between buyers and sellers. Risk and money management is about controlling how much of your trading balance is at risk on a single trade so you can survive losses, stay longer in the market, and let your strategy to produce results over time. Keep it in mind that success in trading doesn't come from one single big trade, but it comes from a series of trades executed under a disciplined plan. This is why you need to risk only a small percentage of your trading balance on a single trade, maximum 2%, so that you can avoid big drawdowns. The key point is to keep a reasonable risk-to-reward ratio, at least 1 to 2, meaning your possible gains are twice of your possible losses. In this way, you can stay profitable even if you win 34% of your trades. Stop-loss orders are also a crucial part of your risk management. Trading psychology is about understanding and controlling the emotions that can negatively impact your decision-making in trading. Stress, fear, greed, and impatience can cloud your judgment and result in poor trades, such as staying longer on loose trade or exiting winner trades earlier. Successful traders learn to understand emotional triggers and create systems to prevent the negative impact of impulsive decision making. Pre-trade routines, checklists, and journaling your emotional reactions can help you to gain a good mastery over your psyche and avoid emotional errors while trading. Understanding your personality through tools like MBTI personality test help you to understand where you are prone to emotional errors. 16personalities.com is a free and useful website that helps you know your personality much better. Once you have mastered fundamental analysis, technical analysis, risk and money management, and trading psychology, the next step is to put them all together to create your own trading strategy. Start by writing your own trading strategy, backtest it with historical market data to see how it would have performed in the past, and forward test it with a demo or a small real account to see how it would perform in the live market. In this video, I try to give you an idea of all you need to know to become a successful trader in 2026. Each of these steps require deep understanding. That's why in the next videos, I'm going to delve deeper into each of these steps. Make sure to subscribe to my YouTube channel not to miss them. If you want to take your trading farther, you can connect with me for online courses and personal mentorship through the links in the channel description. Thank you for watching this video up to the very end of it. I'll see you soon in the next videos.